Hello everyone. Before we start, I would like to thank all the Telegram members for voting and sharing their opinion. That makes us trade as one. If you did not subscribe to our Telegram channel, we hope you join now. We don't have a paid channel, we don't send annoying notifications, and we don't send any ads. All we do is free recommendations and share successful deals with each other. As we are used to. Away from static and modified images, ridiculous animations, and fabricated values, we will use a real chart like every time, and we will try to stop at the important parts of this chart. Well, that was a very long intro. Let's start this video by choosing the right time frame. Let's choose a 1-day frame. You can use any frame you want, 4 hours, 2 hours, 1 hour, or even 15 minutes, but to increase accuracy and increase profit, let it be 1 day. Use Japanese candles or regular candles, because we will need them quite a bit. Okay, after completing the initial settings, let's move on to the indicators. In the search box type, my MACD. And choose the first. Wow. I think it's a little annoying to see it like this, but at the same time, it's very useful. Well, don't worry, all we need here is this yellow line. As for the rest of the functions, we will cancel them. Okay, let's go to the indicator settings. Untick it all, except for the second yellow plot, as you can see here. I will increase the thickness of the line so that it is visible in the video. Okay, after we got rid of all the annoying colors, this yellow line remains, which we will rely on to determine the breakouts, and it will be the main indicator in this video. Well, let's try to simplify the explanation and speak in plain language. Let's see here. When the trend breaks through the yellow signal line, we notice that the trend shot up quickly, in a way similar to the method of breaking through the resistance line. Here too, when a completed green candle closed above the yellow signal line, we notice that the trend has moved upwards. But here the matter is different. Here we can notice a breach from the bottom to the top and the closing of a green candle above the yellow signal line, and with this, the trend has rebounded to the bottom. But why? Well, this was a false signal, and as usual, we will get rid of it, just watch the video. Well, now let's see the effectiveness of this indicator when the trend movement is close to the movement of the signal, or in other words, when the trend moves in a semi-straight line. It looks good even in tight places. As you can see, when the first green candle closed above the yellow signal line, the trend moved up very dramatically. Here is another false signal that we will eliminate. But here is another entry point or another breakout. Here is a good breakout and also another fake signal. Here I am trying to cover a large part of the chart to review this indicator well, that you get used to it before we go deeper. When this line is breached, it behaves like a support line, that is, if there is no downward breakout, it means that we are still in a safe area. I think we have reviewed the most important entry conditions for this indicator, which are: Number 1, the signal line must be breached from the bottom to the top. Number 2, a completed green candle should form above this line, in other language a green candle should close above this line. Well, let's take a quick look at the percentage of the profit after the breakout. As we've noted, it's always good profits in a few days, but all this remains far from guaranteed unless we eliminate the false signals. Okay, let's open the indicators box. Search for SMA indicator, which is smooth moving average indicator. Choose the first one, because we do not want a modified version. The common rule in the simple SMA indicator is, when a green candle closes above it, it is an entry point, and when a red candle closes below it, it is an exit point. In this video we will use it in another way, but the common rule will also be applied. Well, make sure that the default settings have not changed. I will just change the color so that it is clear in the video. As we said, we will use SMA indicator only to confirm entry points. Well, let's see here. When the SMA indicator breaks the yellow signal line going from the bottom to the top and there is a completed green candle above it and above the yellow signal line, we take our position here and this will be our entry point. Here is another example. The SMA indicator broke through the yellow signal line and also a green candle closed above it and above the signal line, so this is also another entry point. Here too, we have a completed green candle above the two lines and we have a breakout of the signal line. I hope you will excuse me for the many examples, because I want to clarify this ideal strategy to the fullest extent. Here is also another entry point according to the conditions we talked about. And here as well. But what about false signals? It seems that it still exists and does not respect the conditions that we talked about. Despite the breach of the signal line and the completion of a green candle above the signal line and above the SMA line, the trend has headed down. Well, to illustrate this problem, let's go back a little bit to a successful entry point and see how this happened in detail. Let's use this time machine and count a bit before the breakout happens. Now suppose we were looking for an entry point somewhere here. Suddenly, we noticed that the SMA line has crossed the yellow signal line, and after enough time we saw that there is a green candle that closed above the signal line and above the SMA line. When zooming in on the chart here, we can notice how this signal is detected very clearly. Well, at first glance, you might think it's a perfect entry point. But that's what happened here too. All conditions were compatible, and with that, the trend changed direction and moved down. To illustrate this, let's look at this false signal up close so we can understand better. Try to focus on the blue line and wait until it crosses the yellow line. Here, the signal line has not yet been breached. Yes, here specifically, the line breached up and also a green candle formed and closed above the two lines immediately after the breach. But with all this, and after the two conditions were matched, the trend went down to disappoint us. Well, we will deal with these false signals our way, and we will reduce them as much as possible. Let's go to the indicators and search for LSMA indicator. Choose the first one, which is the least squares moving average. I will also change its color, so that the colors do not get mixed up with the other indicators. Also check the default settings and leave them as is. Well, after we applied it to the chart, let's see how to deal with it and how this indicator will reduce the fake signals and confirm the entry points. Its movement is similar to the movement of the SMA indicator, with a slight difference, but one of you may wonder why I do not use it only, or why not change the input of the SMA indicator to 25 to be like it. Well, all these are good questions, but watch until the end of the video and you will understand all these questions. Well, after applying this indicator, we will add another condition to the previous conditions, and the entry point will be as follows. First, the blue line must cross the yellow signal line from bottom to top. Secondly, the green line must cross the yellow signal line from bottom to top. Third, we must wait for the closure or completion of a green candle above all lines. Above the yellow line, blue and green line. Well, let's zoom in and see how this fall signal was dealt with according to the three conditions. You have 3 seconds to find out what happened here before we use our time machine. Well, time's up. Now let's go back a bit and see what happens step by step. This is good, as the blue line has crossed the yellow line, heading upwards, and a completed green candle has formed above them. Only the green line remains, it must also cross the yellow line. Yes, the green line has crossed the yellow line now. It seems that the 3 basic conditions have been fulfilled. But what is this? The candle above the 3 lines must be a green candle. But this candle here is red. Well, here's a green candle, are the conditions complete? Of course not, because this green candle formed below the green line and did not fulfill the 3 required conditions. Also, if you focus on the blue line, you will notice that it did not close above it. That's fine, we just found out that it's another fake signal. There is another point, when the blue line crosses the green line from top to bottom, this is also a sign of bad luck. Well, let's quickly review the most important fake entry points on this chart. This is one of them, and I think the reason is now clear. Here is a good completed signal. But here is also a false one. Here's another fake signal, followed by a completed one. Here too is a fake signal that did not meet the conditions. As you can see, the blue line is still below, but here it looks different, and this signal looks like a real one. Here, it is the other way around, here you can enter a short position. Here, the yellow line was breached from the side and not from below, and this is a weak signal to enter. Here all we need is a large green candle to confirm our entry point. Here we have to talk about some of the rules of the SMA indicators. Well, since we are using the simple moving average indicator, and we are using the least squares moving average indicator, and they are from the same family, let's stop for a while and see some simple strategies for these indicators. And this simple strategy will be according to our current settings, which are 7 for the simple moving average, and 25 for the least squares moving average. Well, let's see here. When the green LSMA line crosses the blue SMA line from top to bottom, this will be a downtrend signal. But when the green LSMA line crosses the blue SMA line from bottom to top, it will be the bullish trend signal. As it happens here, a downward crossover occurred and a yellow line crossed for confirmation. Here is another weak breakout that needs to be confirmed as we explained. Here is another short position. And here, another fake signal appears, as we just talked about. I tried to cover a large part of the problems that we may encounter when we trade in this way, so that you get used to using it well, and you can learn a large part of the information. All that remains now is to try this strategy on some other cryptocurrency charts and on the forex market to see how effective it is. And let's quickly see its effectiveness with the rest of the time frames. Well, this is good, but as we said, 1-day frame remains the best and most accurate. And finally, how do we set the stop loss, or how do we get out of the deal according to this strategy? Yes, you can stop loss according to several other indicators, such as support lines, uptrend or downtrend lines, but here, I will talk about stopping losses according to these indicators. Because stop loss is a very big world that depends on greed and conviction before indicators. Well, in this case, you can close the deal here when a red candle closes below the green line, which is the LSMA line. You can also give the trend another chance and wait until we see a red candle close below the yellow line. But be careful, waiting too long can sometimes cost you a lot. Here is also an example of closing the deal below the green line. Here, at the end of the chart, we see that a red candle has closed below the green line. This sometimes depends on reading the type of candles, but in simple color terms, I will close the deal here and wait for a new entry point. Finally, I hope you liked this video, and if you want to develop this strategy to a very high level, I advise you to understand candlestick patterns, and do not forget to leave a comment if you want to explain them in a simple way. Thank you for watching, and don't forget, always use support and resistance lines. Good luck and see you in the next video.